Now, up until yesterday, all we were seeing was the price of gold running up, so we're starting to get these wild claims of huge future runs and also some blow-off tops. So today we're seeing a drop in gold price. It's due to comments coming out of this month's Fed meeting. And I'm going to get to that in a minute, but before we get there, I thought it would be interesting to look at some of the wild price predictions that we're seeing coming in and then consider the idea of a blow-off top, where a blow-off top would be something like we saw in 2013 in gold, but more so in silver, where the price makes a wild multi-year run, it goes parabolic over a course of a month or two, and then it collapses. Now, is that something we're going to see again? Well, some people say yes, it's just a simple case of what goes up must come down, but I would say there's more to it than that. I think what we're looking at here is what happens when something goes up way too fast, way too much. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. That's sdbullion.com/new. So what are these wild predictions? Well, here's an article from A.G. Thorson published on FX Empire that gives a case for a continued price run through 2029. Now, this article takes the run on gold price from 2005 through 2013 as a setup for what could happen today. Now, let's just be clear here. I'm not telling you that I think any of this is realistic or likely. I'm just giving one example of a prediction that I would call wild. It's going to get into that blow-off top idea. So just highlighting some of the author's scenario here, he says the first stop will likely be around $32.50, followed by $47.50, and finally $9,450 in late 2029 or early 2030. Sounds fun, right? Well, at least until 2030. Now, who's the author? I don't really know. He has a professional designation in technical analysis and trading, but again, I'm not vetting anyone here. We're just looking at what a huge run could look like, and this made an easy example. So where most bank analysts are calling for gold prices in that $2,100 to $2,300 range for 2024, well, that particular analyst mentions $32.50 in 2024, $47.50 in 2026, and then $94.50 in late 2029. Well, what happens in 2030, you ask, right? 10,000, 20,000? Well, no, he actually says aggressive selling. So it sounds fun until it's not. But let's be realistic. At $9,450, we would all have plenty of time to get the partying in. Now, if we brought this back to earth, one of the things that I see a lot is this kind of comment that assumes we're going to see a blow-off top without the wild run ahead of it. Like, we're going to be back to the 1600s soon. The ride is over. Well, I would say the realistic case is probably somewhere in the middle. Maybe we see a sell-off with some price consolidation, but first we need to see a run based on the Fed policy reversal that's just getting started now. That's kind of a bold statement, so I'll just say here, anything that I'm saying is guesswork. I'm not a professional analyst. But if you simply look at the most realistic cases being given by the largest number of analysts, we're talking about gold price in that $2,100 to $2,300 range in 2024. And those are the numbers that I typically reference. Now, realistically, any prediction beyond 2024 is going to be based on other predictions that are based on more predictions. So there's really no reason to build those scenarios into any kind of planning. 2025 and beyond is an unknown. Now, you'd be right to say that 2024 is an unknown as well, but the most likely case is that we're going to see dollar-denominated commodities increase in price this year. Gold in particular gains from treasury yields falling, so the short-term case for gold is pretty rosy. Lots of tailwinds, finally. That's once we get to the reversal. Now, what we're seeing right now at the moment is a case of a strong rally bouncing off the idea that the Fed's rate hikes are over. Traders bought the rumor. That means likely rate decreases are already priced into what we're looking at today. So any evidence to the contrary is going to be a hit on gold price. And we saw some of that happening today. If we look at the CME FedWatch tool, the 72% bet on a rate cut in March just dropped to 67%. Traders are not as sure that we're going to see lower rates by April, and that's based on a single comment in the minutes from today's Fed meeting. So let's play out a conservative run, with the first stop being $2,200 for gold price in 2024 rather than that $34.50 and beyond. And then we see continued realistic growth with a possible future consolidation somewhere down the road. Now, it's hard to think that $1,600 are any part of that, any kind of realistic future concern. Now, to be clear, I've never considered that kind of consolidation to be likely. We're not hearing it from analysts, but we are seeing it in the comments section. If I was going to give a guess, I would probably say the lowest sustained price that I see as being likely would be more like $1,900, and that's my low end. And that opinion in a Subway token, well, it'll get you on the train. I see people making fun of video creators mentioning that they aren't financial advisors, but it's an important point. Creators have limited data inputs, they have limited understanding of charts and history, and varying degrees of bias. So if I'm saying that I see a range for gold to be within $1,900, $2,300, well, that's just an opinion from some guy with all of those limits. At $1,900 to $2,300, well, that's a pretty wide band. That's saying $2,100, give or take almost 10%. But it's also realistic. And if prices remain realistic, remain backed up by fundamentals, well, there's no parabolic run that results in a blow off top with aggressive selling. So there goes your $1,600 gold. So 2 points here. First is that we're going to continue to see price volatility. Even if the realistic trajectory for gold price appears to be on its way up, we saw volatility based on a single Fed comment about the possibility of future rate increases. And we're going to see more if we get new comments. We also still have some Middle Eastern conflict conditions priced in as well. We know what happens when that begins to wear off. We can look back at what happened with the invasion of Ukraine. The price of gold came back down as we got more news. Now, all of that is just looking at the potential for price drops. A lot of unexpected things could come up doing the opposite. They could push short-term prices up as well. All we can really say here for sure is that 2023 was a really volatile year for gold price. There's no reason to think that we're not going to see more of that. Now, the second takeaway is that we haven't really gotten to a point where we understand what a top would look like. So these comments suggesting that a blow-off top style consolidation is here, well, really doesn't make much sense. People saying $2,000 gold is soon to be a thing of the past, that might be a little bit aggressive, but the question of whether I'm buying at current price has come up too. We're over that $2,000. Well, I don't have any concerns buying it. Where are we at right now? 2030, considering I expect $2,100 and up to be realistic. But if I thought that $2,000 gold is already a thing of the past, like that article kind of suggested, well, I would be buying right now pretty aggressively, but I haven't yet. I haven't started because I'm waiting for more of that evidence to the contrary that I mentioned earlier. Those Fed comments teasing out the idea that, hey, we're maybe not done with rate increases, so don't get ahead of yourselves. Well, I'm only waiting for a few percentage points. If we saw gold drop into the 1900s again, well, I would take that as a buy trigger. $1,800, I would buy more. That would be that 10% drop that I always look for. 2030 though, well, I'm just not going to lose much sleep paying 2% more of where I like to see it, especially right now with premiums so low. So for those wild predictions like maybe we're on a one-way track above $9,000 an ounce for gold, well, I'm not placing any bets there, but I also think those calls for blow-off top, with prices dropping back below $1,600 an ounce, well, those aren't realistic either. Now, if I did think that those kind of cases were actually realistic, I'd have less physical gold on the table here, and we'd probably be looking at ETF charts. It'd be a lot more about trading gold, a lot less about stacking it. So let's call it good there. Let us know what you're hoping for in 2024 as far as gold price performance goes, what you think is realistic maybe. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.